Step into the unknown and discover hidden gems with Boga the Bull from Legacy Trades.
Hey everyone, welcome back to the channel. If you caught my last video, you'll know I broke down a small cap stock, UGRO, at just 55 cents and it quickly ran up to 82 cents for a 49% gain. But here's the thing, UGRO has now pulled back close to the original entry levels that I gave, so if you missed it before, it actually might be setting up for another solid buying opportunity right now. Today though, I got something else for you, a stock I believe is massively undervalued and has explosive potential over the next few months. This ticker right here, it's been around for a while. It's a good solid company and I do want to dive in and give you more information. But before I reveal it, I do want to paint a picture of what it does. So imagine a business at the center of the electronics industry providing full service manufacturing solutions across multiple sectors. They specialize in turnkey manufacturing, PCB assemblies, testing services, supply chain management, box builds, and even aftermarket support like repairs and replacements. Their clients come from essential industries like medical devices, industrial tech, and consumer electronics. These sectors are expected to keep growing over the next few decades, guys. It's a strong, diversified model, and their current financials and positioning are extremely compelling. Let's start with financials. This company is cash flow positive with $4 million in operating cash flow last quarter. They've been consistently posting positive gross profits over the last 12 months. And another bullish sign, insider ownership is relatively high, around 10 to 15%. That means management success is financially tied to shareholder success, which is always a strong alignment. And here's another positive. There are no active dilution filings on record right now, meaning investors or buyers don't have to worry about sudden share flooding dragging out the stock. Now, onto the valuation part. Their current market cap is about $8 million. Based on fundamental models, their present value is estimated to be over $37 million. That's more than 5 times higher. Annual sales over $311 million. The price to sales ratio is about 2 cents. That's super low for a company of this size. Their book value is $9.41 compared to the current stock price that's just over $1. The market is massively underpriced in this company, and that gap could close fast under the right conditions. So now let's look at what the big players are doing. We have major institutions who are building up positions like TCW Group, who added over 86,000 shares. Renaissance Technologies increased their holdings by 34%. Citadel Advisors nearly doubled their stake. UBS, Group AG, and Tower Research Capital are also on board. When top-tier funds start loading up on a small cap stock, guys, it's a major green flag, and we have to start paying attention when that starts happening. The company we're talking about is Sigmatron International, ticker symbol SGMA. They've been a long-time player in the electronics manufacturing space and currently trading near its lowest valuation levels since the past 5 years. So now let's look at the earnings for the fiscal third quarter ending in January 31st of 2025. Earnings per share jumped to 63 cents, up 10 cents just from last year. Net income rose sharply to $3.9 million from $600,000 the prior year. A big part of that came from a smart move, a $7 million gain from a sell-leaseback transaction. But setting that aside, guys, they're cutting costs and improving margins as well. And while they do carry some debt, it's manageable compared to the revenues and assets. The sell-leaseback move wasn't just a one-time boost. It also helped their balance sheet without needing heavy dilution. So why could SGMA be an explosive stock in the near future? Let's break things down again here. The stock is trading about 89% below its intrinsic value. Smart institutional investors are building positions heavily, and they are positioned in essential industries like medical devices and in industrial tech, meaning they are less exposed to economic slowdowns. Electronics manufacturing demand is also booming. It's being driven by 5G, AI, and smart devices. Their low market cap and strong fundamentals make them a prime takeover target as well, and a buyout could send this stock flying overnight. When you line up all these factors, SGMA looks like a classic asymmetric opportunity, like I've mentioned with other stocks as well. It has limited downside and huge upside potential. So there you have it, guys. SGMA is one of the most undervalued plays at this time, and it's currently on my radar. And just to drive this home, as of today, TCW Group has officially added even more shares to their position. They just filed a new Schedule 13G showing that they bought an additional 770,000 shares. This brings their total stake to almost 12% in SGMA. Now, think about this. TCW Group is a multi-billion-dollar asset management firm with investments in blue chip names like Apple, Microsoft, and Amazon. And yet, they're making a major move into $8 million penny stock like SGMA. This is not totally random, guys. When institutions of this size start buying shares of small companies in this way, it's because they see serious potential that most retail traders are missing. All right, guys, that's it for this one. Appreciate you watching, and I'll catch you in the next video. Peace.